E-mini S&Ps end the week slightly lower, hovering around 56.75. That's actually lower on the week and lower on the day. Not a whole lot happening today. No news coming out. We did hear from a number of different Fed speakers who are back out and about after the May FOMC blackout period, but none of them really challenged what the Fed chair said on Wednesday. It was more of a status quo. Now, taking a step back, we've seen some pretty crazy ranges in equities, especially in E-minis. They've seen an average weekly range of 450 points over the last 5 weeks. Now, that did not include this week where we saw only about 145 points. So you can see how things are maybe starting to get a little more normal, but E-minis remain elevated. They're up about 11% since the April 4th close. So after we saw that big move lower, E-minis have seen a pretty good rally, up 11% today, closing out at 56.75, slightly lower on the day and slightly lower on the week. Now, what does this mean for volatility? Well, typically in equities, as we've talked about, volatility moves inversely to the indices. So as we've seen equities rally over the last several weeks, we've seen volatility coming off, and that's exactly what happened this week. We saw volatility hovering near those 1-month lows. Lastly, let's talk about what we have next week. After this week's FOMC meeting and post-FOMC press conference, we get more next week. We'll get inflation data via CPI and PPI. We'll also get retail sales. And on Thursday, we'll get to hear again directly from the Fed chair, which will end up being the highlight of the week.